Welcome to Beyond the Press Release, a production of Gorecom, in which we take the time to speak with small cap executives after they put out big news. And today is big news because it's record revenues. With us, Jason Williams, co-CEO of Kidoz Inc, trades in Canada under KIDZ, and for our friends in the US under KDOZF. For those new to the story, it's pretty simple to understand, and the numbers back it up. Kidoz owns the biggest mobile advertising platform for kids and families. How big is it? There are almost 4,000 apps around the world using Kidoz, reaching over 300 million kids. More than just lip service. First, let's talk about some of the top brands they work with: Disney, McDonald's, Hasbro, Lego, and a trusted partner of Apple and Google because they're inside their app store. So you know they've gone through rigorous research as well. More importantly, revenue growth. 2017, 1.9 mil. 2018, 3 mil. 2019, 4.5 mil. 2020, 7.1. And the number we're talking about today for fiscal year 2021, $12.4 million, up 75%, and a whole bunch of other record metrics. Jason, welcome back, my friend.
Thank you, George. It's great to be here.
Hey, first of all, congratulations. Look, you're a small cap company. Your growth is out of control. Before we get into the numbers, how happy is your company, the whole team, with this result? $12.5 million, up 75%.
Thank you. Yeah, no, honestly, from across the whole company, we're over 30 people strong now. And there's a lot of pride in what we're doing and the success that we're seeing. And all our partners are really thriving on the service and the products, and it's straight ahead for us, and we're thrilled.
Look, mobile advertising is a very competitive market. It's not an easy market. I mean, it sounds glamorous. We'd all love to be there, but you guys are up 75% in a very, very competitive market. What was the catalyst? What was the catalyst this year?
Well, I think there are multiple aspects to this success. Really, for a company to kind of hit this type of growth multi-years in a row, you need to have that internal strength. So we've got a great strategy, we've got a great commercial team, we've got an amazing technical team that's built just bespoke piece of software and server and SDK system that is running super fast now and is flying. And so you need that. And then you need the market to be coming towards you. And we're in a market that have incredible macro conditions before us. We've got the decline of traditional TV. So we're seeing billions of dollars of child-directed, family-directed advertising coming off of television, and it's coming to mobile as one of the main benefactors. So that huge rush of billions of advertising dollars is coming towards us, which is great. And also we've got the combination of consumer trends pushing that mobile usage up higher and higher, and Apple and Google simultaneously ensuring the safety and privacy is a primary incentive and goal for them. And so the combination of those different aspects, that's why we're seeing the success that we're seeing today.
Let me talk about the macro for a second, because the tech obviously is great, but maybe something a lot of us at home can't really differentiate between your tech and George Comtech, other than your results. So that says it all. But let's talk about the macro. It's interesting that you say that there's a destruction or a transition going on, right? It's a paradigm shift.
Very much so.
The days of kids sitting in front of a TV and watching Disney videos, or whatever the case may be, they're still there, but they're they're really rapidly transitioning. Where are we, do you think, Jason, in that transition? Is it almost all switched over, or is there still a lot of old TV destruction left to come?
There's a long way to go, still a long way. I mean, some of the numbers that I've seen say there were about 6 to 7 billion spent on child-directed alone on TV, and back about 4 years that was about 95% of the money. And now probably at most 25 to 30% has shifted to digital. There's still a good 70% of those billions of dollars that are not spent on digital. and still transitioning at a rate of 25 to 30% kind of a year as the growth in
You
digital
got a
grows.
lot of runway in front of you.
Long way to go. Yeah. And there's nothing changing it. The space is evolving, but in a really good way and all towards us. So yeah, we're really confident and very happy with our position.
Now, a lot of small caps, and this doesn't apply to you because again, the numbers do all the talking. A lot of small caps, George Tech will say, well, the widget tech industry is in a massive paradigm shift, and I'm George Widgets. I'm going to succeed from that, and that's not necessarily the case. It doesn't matter. In your case, you're succeeding, but part of that success is the trust. Right. And oddly enough, or funny enough, I'm watching Super Pump, that mini series about Uber.
Okay.
And the last episode had Uber sitting in front of Tim Cook, and they're going to kick them out of the App Store. Didn't matter that they're the biggest app because of trust and privacy issues with their users. You have that trust. How's your relationship with Apple and Google? Clearly it's great right now, but what is it they really like about you guys?
It's a great question, and is something that's critical to our business. And so first off, it starts with the kind of the years of service that we've spent adapting our technology and building our technology to always be ahead of their policies and ahead of their policy changes and adhering to them in a really positive way. And so the security of our technology and the privacy is ironclad. And so they see that we've always adhered to it. We see that we have stayed ahead. Apple has an extra rule of ensuring that every single ad that airs has been human verified. And so we do extra layers of protection. And so Apple have been there before us, and their rules are well suited to us. And Google has even gone in an extra step in some of the conversations that we've had with them. And that is that
your dog agrees, by the way. Your dog agrees that
for sure, for sure. No, I'm really pleased that she seconds that. And they've given us a big vote of confidence. We're really in active conversations about many great things that are happening on the platform, and they see us as an important part of that ecosystem. And we're pleased to be there and offering that type of solution that they can rely on to enhance the safety of their family segment.
Would you say, because we wouldn't know the answer to this and nobody at home would, but would you say that Kidoz is looked at as a real industry leader when it comes to not just the tech, but the trust side and how you guys go about delivering your mobile ads to kids and families?
For sure. Yeah. I mean, that's been one of the kind of pillars of our mission and vision from day one, is to ensure that we approach the privacy and security through our technology and through the offering to enable brands to be brand safe and to enable kids to operate on mobile in anonymity as they deserve. And so that's the kind of marriage of the vision from the advertiser and the user perspective. And also the app itself can ensure that they're operating compliantly and that they've got great, relevant, high-paying ads so that they can monetize in a way that allows them to keep building great content, which is what the kind of ecosystem thrives on.
Let's do a deeper dive into some of the numbers, because the top line number is great, 12.5, and I'm rounding up from 12.475.
Sure.
But inside of that, there are two numbers. The adjusted EBITDA is 1.5 million and change. That's up 95%, right? So that's up even bigger than the revenue number. And then the other number I want to talk about is Q4. $5.9 million in revenue, up 109%. Let's talk a little bit about those. First of all, adjusted EBITDA. What does that say about the profitable side, the health of the company?
Yeah, I mean, and really that's what I was going to come to, is that the company has never been stronger when it comes to working capital and the cash in the business. We're now sitting at about 4.5 million as at year end in working capital and over 2 million in cash. And so that allows us to just be, really start to build the business plan out. Instead of just 1 or 2 years, we're now looking 3 to 5 years out, and how we can really enhance that growth. What type of people can we bring in that's going to take us to the next level? And obviously we're growing fast and the revenues are growing fast. So there's lots of different areas that we can do, but we want to grow even faster. So that's always the goal. We want to really move this number big, and that's what we're after.
And you stole my thunder on that working capital, because I was actually going to ask you. I've got a question here. You and I don't exchange the question
No, we didn't
beforehand.
talk.
I was
No.
going to say, you want to grow. It's very competitive space. How far is that $4.5 million going to take you? I was actually going to ask you that.
Right.
So, but you're
Yeah.
talking that $4.5 million basically gives you all the runway you need. If it's 3 to 4 year
absolutely.
runway, that's forever in
Oh,
tech
for sure.
world, right?
No. I mean, as an entrepreneur and software kind of professional, I've never had that type of runway. So it's amazing to see that under us, and we've got the team just firing and really excited, and we're bringing on the right people that fit the culture, and excited about our mission and excited to see us grow. And yeah, it's a wonderful spot to be in. And I mean, just financially, the company's in great shape, and we're excited about the future.
And generally speaking, tech investors love to see their companies have a healthy balance sheet, but at the same time, they don't want to see a bloated balance sheet because you're not some dividend paying bank. How do you think, I mean, there's going to be a lot of ways to deploy it, but what are you most excited about in terms of how to deploy that war chest? Is it personnel? Is it more sales and marketing? What's your top 1 or 2 priorities?
I mean, from day one, the structure of this company has been built on keeping advertisers happy based on the best results. And so that comes from a combination of the best technology, pushing forward on the product, ensuring that it reaches more and performs better. So that comes down to the engineers and the product designers and the whole team involved in that. And then secondly, that comes to, like you said, the commercials. So we're working on different ways to run different commercial strategies. We have a global sales network that we work with, but we're really enhancing the way that we support them. And we're pushing into some exciting areas that, this business, you pointed out that the 5.9 million, it was incredible Q4, but there is seasonality. And so usually we have a slower kind of first half of the year. But what we've been working on and is starting to really show some returns is the performance marketing area of mobile advertising. And what that means is, instead of relying on the campaigns year round from some of our amazing advertisers like Disney or Lego, who are promoting their films or their toys, which happen to be concentrated around Q4, we are also running more campaigns now for app developers themselves, who are targeting offerings such as educational or music learning types of apps. And these need to grow year round. And so it allows us to bolster what we're doing in other times with a foundation of revenue that won't be impacted seasonally. And this is a huge industry. I mean, this is $100 billion industry of app installs yearly. And this has built the kind of incredible companies such as AppLovin. And here you go. 1-1 on the dog barks.
Yeah.
See who goes up. AppLovin and Iron Source, who just performed amazingly. These are multi-billion-dollar companies now, and they've built their businesses on the backs of enabling publishers to grow their app businesses. And in the family segment, it's no different. And so there are a lot of great companies that are building apps that are targeting families, and we're now offering them a way to grow and monetize and get a return on their investment. And that is a great way for Kidoz to grow.
So fair to say, Jason, that you guys have more opportunity so you can pick and choose, right? Because it's not just Q4,
more opportunity than ever.
So it's not just Q4, back to school, Thanksgiving, Christmas. You guys can really spread that out. Geographically, how are you guys doing? Because I know we've had prior conversation about you're growing around the world. How is that going?
Right. Yeah, super interesting. And again, we didn't talk about this before, but in 2021, Kidoz ran campaigns in 58 different countries. So that's how global we are. And also now, I think, we always see a huge power of revenue from the US and from the UK, Western Europe. Those are kind of the three areas, but we're seeing a lot of growth in Asia, in Latin America, in Central Europe, Southern Europe. And so, mobile is everywhere, and that reach is powerful. It's a personal relationship between someone and their phone, and we're a part of that experience, and the growth is coming globally.
Yeah, in a lot of ways, Asia and South America are, you hear quite often that they're way ahead of us in terms of mobile use, mobile
True.
tech. How's your penetration looking at either? Which one are you most excited? I mean, Asia's bigger, but that also
Yeah.
means more competition. Which one of those regions are you most excited about?
Well, a lot of it comes down, when you're talking advertising dollars, it comes down to disposable income too. And so when we're looking at disposable income, definitely Asia is bigger there. So we've got the Japanese market and other kind of powerful economies where there is a lot of spend, and so those are probably the biggest regions that we think can move the needle the most. But we, as a network, we have tremendous traffic from every country. So like Brazil is one of the top countries on in terms of impressions, but it's not a big monetizer in advertising technology. But so every kind of push that we can make into regions like that and filling those impressions starts to make an impact. And so that's why we've got a number of different strategies to fill each and every impression and just tick those revenue numbers up from every country. And that's the way you approach it. Really, it's incredible how much traffic there is. Like we're talking, I mean, billions of impressions every day.
And you guys see the ticker rolling. Do you see,
Oh yeah.
is it nonstop growth that just keeps growing?
It is, which is a wonderful thing. It's definitely keeping us on our toes. And as we plug in more ways to fill each impression, we see those numbers grow on a daily basis, essentially. So we're seeing just so many interesting things. We've got the branded deals are coming in from the sales network. We've got the performance deals that are coming in through our own efforts. We've got some interesting kind of commercial teams working on that. And then we've got like a programmatic strategy, which is just system to system talking to each other, because we're plugging into more and more of the larger ad tech exchanges and demand providers to enable us to fill more inventory. And so as we become more connected and more sophisticated and more processes behind what we do, those numbers just tick up. And that's what our job is, really.
Last question for you. I mean, look, I read off the revenue numbers at the top of the interview from 2017, 1.9 million to fiscal 2021, $12.4 million. So
Yeah.
obviously you guys know how to deliver growth. What do you think the end game is for you guys and your shareholders? Does it
Sure.
it come a point when you become a target for
Yeah.
the bigger ad players out there?
Right.
Or do you just have the luxury of, George, we can continue to grow for the next 5 years, so we're going to maximize our growth internally? I mean,
Yeah,
I know I'm not asking you to make a call or prediction, but
no,
it's
that's
good to know the
okay.
options.
It's my job to throw that at all times. I mean, we're enhancing the value in whatever way we can for our shareholders, which is myself included. And so when you get to this point of in a software high growth technology business, you start to look at your options, and your options definitely are maintain the growth using that capital to enhance the growth, to get that share price up. And that's certainly a near-term goal, and always something that we're working on, is to get that share price up. Some of the macro environments are challenging in that, with some of the risk off that we've seen, but we just keep doing what we can control on our own business. And, we're firm believers that will come around. And then certainly there are opportunities in the market to explore, from whether it's a strategic buyer or a financial player of some sort that maybe sees an opportunity here in an asset that perhaps isn't showing its true value. And so definitely we're open to those conversations, and we'll do what's best for the the shareholders of this company and to make sure that the true value is really exposed at the end of the day. And so we're excited what that will bring. We don't know, but it's definitely we have to assess every avenue as it comes.
Last question, actually, and I may have said that before, but I was just thinking about as we're talking, because we're thinking about down the road what's coming. And
Sure.
This could be a short answer because we could potentially get lost in this. And here's the question, because you're probably wondering what George's going to ask me. There's TV, then there's mobile, and we're hearing that 3-4 years from now, 5 years from now, the metaverse is going to start to play a serious role. Have you guys started, or is it too early, or have you guys started to give that some attention? And is that something that is going to be the next transition? You're going to need to stay ahead of that.
No, it's an area that we're looking at quite seriously, actually. I mean, it depends. It's different. It depends. We are in some metaverse apps already. There's one called Kagama that we're inside. There's one called Play Kids that we're inside.
Oh,
and so
okay. I didn't know that. We should talk about that more in the next one. These are apps that we're inside already
that support video advertising. So Roblox to date does not support video advertising, being one of the big meta players, obviously, and having a lot of kids. So what their plans are specifically for video, we're not sure. We are aware of the different advertising solutions that are operating inside, and it is interesting, but we'll have to kind of wait and see how those platforms develop, and if it's an interest to them to begin to monetize with the tried and tested and true form, which is video. And that's what the advertising business is built around. So if Roblox chooses to head down that path, certainly we'd be interested to help them make the most of it.
Well, I'm glad I kind of thought about that question, last second there, but more importantly, I'm happy that you guys are already looking at it, already involved in it,
for sure,
and have an eye on that. So that's great. And we'll talk about that more. Maybe we'll do a deeper dive in the next one. But in the meantime, Jason, congratulations to you, to Eldad, who's your co-CEO. A lot of new people watching may not know who he is, but Eldad Bentor is your co-CEO. So congratulations to the two of you and the entire Kidoz team for, look, I'm a tech company, and I look at that kind of revenue growth, and I know how difficult it is to achieve that revenue growth. So I'm envious, but I applaud you at the same time, not because of the number itself, which is great, but the fact they're able to grow that number pretty significantly every year is a sign of a great company.
Yeah, we're really enjoying it, and there's more to come. 2022 is off to an incredible start, and we hope to deliver once again.
Well, the quarter officially is ending today, I think, right? Today is the 31st. So it'll be what, mid-May or something like that when we find out about how the first quarter went relative to last year's first quarter.
That's right. Yeah, no, and we're super pleased with it, and the advertisers are pleased, and our investors will be too.
Well, you're definitely not resting on your laurels. I give you credit for that. A lot of people like to kick back, put their hands back, enjoy a drink, and say, I delivered 75% revenue growth and 12.5 million top line. You guys are already chugging, man. That's even more great sign for all the shareholders, Jason.
Thanks, George. Yeah.
Everybody at home, you've been watching or you've been listening by podcast on Spotify, Google, Apple, or your favorite podcast platform to Jason Williams. He's co-CEO at Kidoz Inc., trades in Canada under KIDZ, fantastic stock symbol, very easy to remember. And for our friends in the US under KDOZF. For those new to the story, because you saw this top line number, 12.5 million, wondering who are these guys? Well, now you have a pretty good idea to start your due diligence, to start your research. Get to their profile page on Agoracom, because there's a lot of moving parts here. There's a lot of new tech. We've got a great 1,000-foot summary for you there that explains the company. And then when you got that foundation of information, head right over to the Kidoz website, do your deep dive due diligence. Guys, if you believe in the future of mobile advertising networks and platforms, Kidoz is it. You've got to do your research. We can't tell you what to do, but you've seen the revenue growth. 12 months from now, don't say we didn't tell you so. Thanks for joining us. Have a great day. See you next time. Hey guys, this video is over, but don't forget to help your company by liking it and even leaving a comment below. And then don't forget to help yourself by subscribing to our channel and never missing another great Agoracom small cap video.